It's Wednesday the 3rd of July. This is the Aussie dollar chart, very, very clearly in a bear trend. So I was looking for the market to reverse from the strong resistance level around here. We overran my level slightly, but hopefully not enough to stop you out. Big bearish engulfing candle. We engulfed at least 2 days worth of rally, almost 3. We hit a decent support level around 69.60, 69.55. I could not have recommended a long here really, especially after such a big bearish engulfing candle in such a negative trend. But nevertheless, that support level held. So now it's a question of what happens up around 70.30. That is a very strong resistance level. So ideally we can try a short there with a stop above, say 70.40, 70.45. On the downside, we still have this support around 69.55, so a break below 69.45 would be more negative. I would expect this one to be weaker, the support level, than this. I would expect this resistance level to be stronger. So what I'm saying is, I would rather bet on us reversing from around 70.30. I would see buying down here as more of a risk. New Zealand chart is a bit more messy. I don't really know what to do with it, if I'm honest. Again, a big negative engulfing candle, so that certainly is bearish for the New Zealand dollar. We've had a little bit of a bounce back. I kind of want to sell this, but it's difficult to identify a good level. There is a little bit of resistance at 66.90, 66.95. But the 200-day moving average and the 50% line at 67.10 did nothing on the way up or on the way down. So I guess we have to ignore that. Yeah, it's a bit difficult. Quite honestly, I'd rather just leave this pair and wait for some sort of signal or pattern. There's nothing. It's really quite erratic, as you can see. This very, very strong rally. And no real reason why we topped where we did, other than the fundamental reason, of course, that the dollar was stronger after the weekend's political meetings. Dollar yen again is confusing me. This 108.10 level was a really good level. It worked, worked on the way down, worked on the bounce back up. And then even when we gapped above it on Monday morning, it made sense that the gap above would push us higher for a buy signal. We hit the next target, in fact. But now this has confused me yesterday with this collapse back below that level. So anyway, holding below 108.00, 108.10 certainly is negative, and we have done that. So we're heading lower. So really, this does look negative. If we now move below 107.55, that will be more negative. Euro yen, I'm showing you the hourly chart. This 122.20, 122.10 support area worked for a while. Worked very well for a while, although there wasn't a huge amount of profit on the bounces. But once we broke it, then of course we just collapsed. That support level, once that gave way, the sellers just piled in and sent the market lower. So the outlook looks negative. I think we can test the recent lows at 120.93 and 120.77. That will be the only support level of the week, really. Certainly, stochastics are indicating that we can go lower. And there's nothing. Yeah, the weekly chart isn't really showing anything but sort of a consolidation pattern of the recent negative moves. So watch for a test of that area just below 121.00 and a break below just below 121.00 and a break of the low at 120.77 will be further negative signals. If we were to get anywhere near 122.20 or 122.10, 122.20, then that would be a selling opportunity, but I think that's unlikely. We'd had really good support for the euro at 113.50, well, 113.60, 113.50 all of last week, and if you were buying there were really decent scalping opportunities. On Monday, with that news over the weekend, the euro plunged against the dollar pushing higher against most currencies. We broke lower. We hit the next target of 113.00, 112.90. We overran that a little bit to 112.73 and then bounced back to 113.20. I'm going to take that 113.20 now as resistance. So it's a fib level. It's not the best level. I mean, this euro chart, I mean, you can see is just so messy. Every price I could I could argue that every price is a level based on the last 6 months or 9 months even. We just traded sideways so much. We've traded so many prices over and over again. But my best guess now would be a break below 112.60, 65, 60. So let's say that would be a minor support level. A break below 112.50 would be the next sell signal. So we do have a little bit of support around 112. Yeah, call it 112.50. We have a little bit of support, but below there would be more negative. We've got resistance around 113.20, but you know, you can see this chart is messy. I don't know how anyone's supposed to guess where this is going in the near future. Canadian dollar has been stronger over June, as you can see, kind of erratic, but still we have headed lower. So we're retesting the lows for the year at 130.64. We've got to 130.55. I don't really think that that's the strongest support level. I'm not sure if I would be buying there. It is a fib level. Well, it is a 38.2% fib level. Again, without any real trend to follow, it's difficult. You can see that trying to read the market through March, April, May was almost impossible. So I'd suggest that if we break below 130.50, then that would be negative again. But the only thing that I can really get excited about on this is we are oversold on the stochastics, as you can see. Now, when you look at the hourly chart, there is a potential inverse head and shoulders pattern. On an hourly chart, it's not the strongest pattern, but you might want to just draw your trend lines on your chart like this, and you can see that we've got some support around 131.00. We've got resistance around 131.40, 131.50. So I would trade those parameters. But a break above 131.60 would be bullish and could be seen as the completion of an inverse head and shoulders pattern. The pound has been in a bear trend for quite a while. We all know why. Although more of a sideways pattern, I must say, in the last few months. Okay, so well, actually, let's stick with the weekly chart. So you can see that we reversed from peaks at around 127.50 area. We've now reversed, so we've got a little bit of weekly support around 125.70.50, which is where we're about to test. I would say a break below 125.50 will be negative now, and we can retest the June low at 125.04. We've got the January low at 124.36. Okay, that's a fair way away, but we just really do seem to have downside momentum in the pound. On the report, I've got us breaking support at 126.60 for 126.05 and 127.70, 127.60. So that's why I've got those levels. And then if we break below 125.50, that's more negative, and we can retest the June low at 125.15.05. So those are the reasons for those levels. I do think we're going down, but the best resistance level and really the only place to sell into a short would be at 126.60.70, but I don't think we'll see that again. You can see that there's no, I can't see any strong resistance levels that I would particularly sell into below here. This is definitely the key. Gold has become extremely volatile, and if I'm honest, I'm very surprised at this strong bounce back. So let's see what happens at 14.36, 14.38. We've rejected it today. In fact, we topped exactly at 14.36, which I think was my level for the day. This is a guess, but I think we're going to get a double top here, especially after what happened last week up at 14.38. I think sellers are going to come back in again. We're going to get a double top. We'll have to see what happens on the weekly chart, but if we get a tweezers top, whereby we reverse from 14.36, and head back down to the 14.00 area by Friday night, or even lower, then that would be confirmation of a decent double top, and then gold would really start to go significantly lower over the summer. We're getting overbought on the weekly chart. We were overbought on the daily chart, just starting to ease that off now. If you like divergence, we do have some negative divergence on the stochastics because this has not managed to achieve the previous peak, matching what the price has done. It's a tricky one because the moving average is just starting to turn positive, but I guess all I can say is that 1436, 1438 is key. We start breaking above 1440, that's going to be more positive. We're going to break what I think is a double top high. And that's it. You know, this doesn't really give me a clue at all, the recent price action. So I think I've summarized it as best I can. It's really a kind of a wait and see situation, or if you want a fairly low risk punt, sell around 1436, 1438 with a stop above 1442. Stock markets broke higher on Monday. We've got a doji there in the evening, the S&P, which isn't the most positive candle, but the breakout was sustained at least. So the high on the Friday before was 29.55, and we bottomed there on Monday. On Tuesday again we've held it. So I fancy us to trade sideways to consolidate the breakout. We are overbought. I definitely don't see a sell signal. So I think you have to be very brave to sell the US stock markets. But if we go higher, I think it'll be a slow crawl because we are so overbought. I favour a sort of a sideways to maybe with the odd day with a decent blue candle and then sideways. I don't see any particular strong upward trend. I don't think we're going to see too much of this. I think we're going to see more of sort of this, a big blue candle, a bit of sideways, maybe down, you know, sort of a 2 steps forward, 1 step back scenario. Very similar situation for the DAX. We've broken higher, but we're consolidating in overbought conditions, so sideways to higher, I think. It's quite difficult. This is a difficult week. We had very, very strong dollar reaction on Monday, which did not follow through on Tuesday, so that's kind of unusual. Honestly, I don't see any strong trade opportunities, which is why I've left the spreadsheet out. I'm going to have to let the market settle for a day or two and try and get a grip on this again. But trying to figure out direction recently has been a struggle anyway in most of the markets. We're just not, except for stock markets, we're not really seeing any decent trends to ride a trade for a day or two overnight. So it really is a case of following the reports on whichever are your favourite markets, maybe 2 or 3 of your favourite markets, and just scalping the levels for a 20-30 pip turn whenever you can. You're going to have to sit in front of the screen really and be quite active. There's not really much I can do to offer you to put a trade on and then leave it for a few hours or overnight. Unfortunately, those market conditions simply don't exist right now.